as I shared, there were 4 trades today, and the first 2 came off of the pound dollar, and they came off the pound dollar on a 5-minute chart. This line here, this vertical line, represents the start of the London session. Okay, that's when I encourage you, and this strategy is built around the London session, which runs from 3 a.m. Eastern Time till 12 noon. I'm in a central time zone, so you may see that mine says 2 o'clock. So yeah, I begin my trading day at 2 a.m. I'm not always wide-eyed and bushy-tailed, but there's money to be made. So I'm in front of my charts and ready to go. Here is our first trade call. This is the first trade that we would have taken today. As you can see, as John, I think, has explained, these are PVM dots. So this is a valid trade having a PVM dot. We would have entered right here at 1.6329, and we would have taken it up to our first profit target, which is this smaller dot here, and that was at 1.6349. Now, there was a rather lull in activity right here. We would have had to sit through this for a little length of time, but eventually price does come around, heads up, and if you take this price point right here, draw a horizontal line through it, you can see that we reached it in this particular bar candle here. The difference between that entry point and that first profit target was 20 pips. If you take out a 3-pip spread for our broker, and I've shared that with you before, we're fair here at Tsunami when we do our reporting. And if your broker's charging you around 3 pips for this trade, you actually would have pocketed 17 on your first trade for the day. Now, this particular bar does have a PVM dot, and we'll explain to you why you are allowed to take this particular trade, basically because it closed above your last target. So you take this particular trade here on this bar, and here's your entry point at 6358. First target is just a hair above this particular pivot. Now, I encourage people to take their profits off at the pivots, so we will do so. There's only a difference of 1 pip there, but your profit target here then on the pivot would be 6372. A difference between this entry point and your pivot is 14 pips. If you take out 3 pips as spread for the cost of executing this trade with a broker, you pocket 11. If you add that to the 17 prior, 17 clean pips, you're now at 28 pips for the day. Now, we will explain in terms of strategy, since there was no PVM dot with a bar closing above this past pivot, we can't really take any more trades until this particular time zone here. So in the meantime, we were watching some other currency pairs. And I was watching the Aussie. The Aussie dollar produced a trade on a 10-minute chart. And after having closed out that pound trade, we had this particular trade present itself to us here on the Aussie dollar. It was called at 5 o'clock. Entry was at 8398, and our first target was right here, just a tad below this pivot. So once again, I encourage people to take profits off at this pivot, which is just slightly above this first target, which we'll do. And here again, there was a lull in activity. We had a little retrace, but then we take off again, and we reach our pivot, this first, which would be now our first profit right here. And the difference between that entry point and this pivot is 11 pips. If you take off the 3-pip spread, the cost of executing the trade with the broker, you pocket another 8. Add that to the 28, you're now up to 36 pips for the day. And as you'll see in just a few moments, we're looking for 30 pips of profit each day. We're now at 36 clear and clean pips for the day. You could stop trading here if you want to, but another trade opportunity presented itself on the euro this time on a 5th chart. So I'm switching over to the euro 15-minute. Now this is the start of London. This is where New York joins us. So if by chance this was going, you were only choosing to trade after New York time, after New York begins its trading ventures, here was your first call, your first trade call with a PVM dot right here. You would have entered at 1.4284 at 9:30. And once again, here is your first target, but take your profits. You're encouraged to take your profits at the pivots, and this pivot was reached here. The pivot is at 1.4264. The difference between that entry point and this first profit target is 20 pips. Take out a 3-pip spread from your broker. That leaves you with 17. If you add the 17 to the previous 36 that you would have racked up during the London session, you're now at 53 pips for the day. That's a lot more than 30, folks. Now, those are the number of trades that we would have taken today, the ones that I'm showing you. We give you more specialized training and give you clear indication of why to take certain trades, why not to take others, during the live trading room that I conduct each week on Tuesdays and Thursdays from 8 a.m., which is the start of the New York session, until 10 a.m., which is 2 hours into that session. We just finished our session today with a number of people in it, and would love to have you join us. Just purchase the software. And this is a tally every trade by trade, starting with the 17th. You'll see the record of these trades. What you're basically looking at is the dates of the trades, the pair that the trade would have been coming from, whether it was a buy or a sell, the entry point specified by the software, the time the trade would have been open, the stop loss specified by the software, and here it is in pips. Every time a trade reached target 1, in I through L, we record it in these columns. So you see the price point at which the trade would have been exited at its profit target, the resulting number of pips, and here again is with respect to time, how long trades were open. In columns M through P, you see those trades that ended in loss, price point at which we would have exited the trade in loss, and the resulting loss in pips. The time frame that the trade was called from, and we work from now in this strategy a 5-minute chart, or a 10-minute chart, or a 15-minute chart. If the target varied from that specified by the software, it's actually listed here and gives us an indication which pivot or what actually took place. We exited 5-minute early here, and I think there's an explanation down below, but this is before an announcement. Things of that nature will give you ideas as to when we had to, according to our strategy guidelines, which we do provide you, you would deviate from the profit target specified. It would be here. But these are the resulting number of pips you would have put into your account. Once again, including a 3-pip spread. So let's scroll down here to the bottom where there's a tally. So out of the 66 total trades called over the past 14 days, 60 of them were winners, which results in a 91% success rate. On average, you are pocketing 14 clean and clear pips per trade, counting once again a 3-pip spread, the cost of executing your trade with your broker. That's not just good, Billy. That's excellent. But I know what you mean. That's great. It's excellent to have a 91% win ratio. You don't get that in a lot of squares, and a lot of strategies can't make these claims. And we're not claiming that you'll do this consistently. These are results. They're historical results over the past couple days, past couple weeks, and we will continue to tally these results. That is correct, Billy Ray. It's only taking target 1. Now, once again, target 1 can be specified by the software, or it can be one of our pivots. And again, we will teach you how to work with target 1 or a pivot. We will teach you that in the trade room. We will give you a full explanation of how to work with TsuBot2 and the 30-80 strategy. Now, conversely, we want to be honest. We lost 6 of the 66 trades. So that's a 9% losing ratio. On average, per trade, per losing trade, you're losing 30 pips. Doesn't look like a good ratio, but when you say I'm losing 30 pips 9% of the time, and I'm gaining 14 pips 91% of the time, now we're talking. Now we're talking. So perhaps for some of you that come from other trading ventures, they consistently tell you that you must have at least a 1-to-1 ratio, or you must have a better than that ratio. You have to profit more than lose. I say, really? Is that true? What if I'm winning 91% of the time and I'm losing 9% of the time? That changes. That brings us into a whole new ball game.